Hi, this is Atmir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 22nd of March. And nice bounce, obviously, from Monday's support area, just near 7,200, bear trap below 73. We're back above the 200-day moving average around 74.20, and we're even hovering above Friday's high, pre-dive high, let's call it 75.10. Above 75.10, looking for this market to at least head up towards resistance on the way down at 76.40. If you're really keen, then you'd be assuming that the market will head up towards either the late January support 77.20 or the 50-day line at 77.90, well, 7,800 roughly at the moment. But the ideal scenario is that we stay above 75.10, below the 200-day line around 74.20, then we risk a move down to 7,300, but don't expect anything worse than that at this stage. On to the DAX, where we're hoping that this market will remain within that rising trend channel from back in October. Amazingly, given that Credit Suisse is not too far away from the German market, we've actually had unfilled gap to the upside yesterday. We're just touching the rising 50-day moving average now, around 15,300, let's call it. End of day close above that, and we could fill the gap up towards 15,500, 15,600. Which would be really quite a recovery, amazing recovery really, given the fundamental backdrop. RSI is now pushed through neutral 50 as well, so that gives us extra confidence that this is not a bluff by the DAX, but actually a proper move to the upside. We actually have now the 50 and 200-day moving averages both rising, so that is quite a strong technical indicator. On the downside, if we do break back below the October support line, 14,800, then obviously 14,500 could be back in the picture again, which was November-December resistance. Moving on to the Dow, which has also been trying to recover rather better than maybe one would have expected. We managed to gap through the 200-day moving average yesterday, which is really a very strong signal for such a liquid market, and above the floor of that gap around 32,300, we're looking for the 50-day moving average again around 33,300. That was obviously the block on the way down. The only thing missing, I suppose, at the moment is the RSI getting back above neutral 50, and RSI neutral 50 failure earlier this month is what gave us the big drop back in the first couple of weeks of March. Moving on to Bitcoin, where we're still hoping and praying for 30,000 to materialize. So far, we're not too far away, actually. Consolidating very well indeed. Probably couldn't be better than that, really. Nice bull flag there, holding above the initial March peak, 26,600. And the longer we stay above that, the more confident we would be that we'll head up to that late June resistance line projection as high as 32,000, which really would be a massive victory for crypto fans. I think, given where we were at the beginning of January, this looks like an absolute party. Moving on to the stocks themselves, and not too many heroes today. Really quite the cupboard rather bare at the moment. Here we've got, starting off with critical metals, which was one of the heroes for November and going into December. Now we've got this consolidation. Just I think the stock trying to stop out a few people below the 24 pence level. We had that yesterday and we sort of bounced back. So it looks like a bit of a bear trap there below 24 pence. If that is the case, then we could at least head up towards 28, 29 pence at the top of the range, which has been in place for the last 4 months. Uptrend line there in the RSI window, just about holding as well. And the reason for the enthusiasm, or the relative enthusiasm, is the way that the 200-day line is still rising. The best thing would be, obviously, if we could manage to get back above the 50-day line on a sustained basis. Eurasia is next, and always a target of the bears, but still hanging on in there, let's say. Here we've got that falling wedge that we've had for many months now, since back in July. We've got the situation where the 50-day moving average coming in as resistance. Really want to break that on a sustained basis. We've had a few spikes through it, but then they've been sold into. The line there from September around 4.25 pence, and if you're fussy, you want that to be broken before you assume that we could head up to 5 or 6 pence for the shares. But at least one can say that we've had a higher support there for the shares around 3.5 pence yesterday versus the beginning of the month, and that might be just the first sign of a turnaround, although obviously this is a rather more quiet market than it has been for quite some time. On to Evgen, which is one of the rare risers today. Here we're trying to break through the 50-day moving average. Second attempt there, 4.25 pence. Had an attempt last week to do that, gapped up with that attempt, and that gap remains basically unfilled, which is a good sign. End of day close for 4.25. We're looking at 5 or 5.25 over the following couple of weeks. RSI now pushed through 50 as well, so if it's going to happen, the breakout's going to happen. Now is the time to do it. News from Galileo today, and that was suggested it could be the trigger for getting a decent move from the 1 pence area. Line of resistance there from back in October around 1.15 and the 50-day moving average as well. Want to see those cleared really on an end of day or a weekly close basis, and also would like to see the RSI break back above the neutral 50 level. That hasn't been above there since early February, so some work to do there, but looking a little bit better in terms of a recovery attempt. One of the better movers, I think it was last week with some big news, was Great Southern Copper. And here we've got almost the perfect setup here. Well, it's surprising perhaps, but as not many people maybe look at this stock, but we had a gap down back in the beginning of March and an unfilled gap to the upside last week. Very impressive, rising 50-day moving average as well. So it's a bear trap island reversal plus bullish divergence as well. So all the boxes, technical boxes ticked that we like in these sort of recovery situations. Could suggest that we're heading up towards the 2.6 pence area, just above the 200-day moving average over the next month or so, maybe by the end of next month at the top of that triangle that I've just drawn from December. So looking very encouraging indeed, and especially encouraging while we hold above the that February peak around 1.45 pence, that kind of area. So above 1.45. Shares looking as though they can deliver a decent, meaningful turnaround. Situation where we're looking for a turnaround, which hasn't quite happened yet, is Jubilee Metals. Here, the company, I would suggest, was rather hard on itself in terms of RNSs and describing its situation. But here we've got the possibility of an exhaustion gap there to the downside from last week, and filling that gap, the top of that gap there around 8 pence. End of day close above 8 pence would be a gap close buy signal. We've also got bullish divergence, so the lower lows of the last few days, but RSI remaining steady. 8 pence plus, we could get back up to 9.5 pence maybe, or by the end of next month. So just the first signs there of a turnaround at Jubilee. On to power metal rather, and here we've got shares looking like they've delivered a bear trap. The shares obviously spiked down after the departure of Paul Johnson. The old low there around 0.75 pence, and we had that little probe down to 0.52, which was rather painful, I suppose. But here we've recovered the old 0.75 area, and above that looking for the shares to head up to the 200-day moving average, maybe 1.25 pence by the end of next month, while they hold above 0.75. That should do the trick. If you look back, you can see that the last time the shares were oversold in July, they rallied from 0.8 to 1.6. So let's see if they can achieve the same feat over the next few weeks or the next month or so. On to Predator, where there seems to be a bit of a buzz on Twitter about the company. Here it's interesting that we had support there last month around the 6 pence level. A little bear trap there below 6 pence on Friday, on the 17th, and above 6 pence, looking for the shares to fill the gap up towards 7.5 pence, maybe over the next few weeks. If you're cautious, you wait for the RSI to break above neutral 50, but it looks as though that St. Patrick's Day bear trap may be the swing low for the stock. Just a couple of shares to go now. First one is Saito, another one with a bit of a Twitter buzz going on, and I covered this yesterday. Looked encouraging. Got those clear candles there, opening at the low, closing at the high yesterday, which is a very strong signal. Obviously, it did fail earlier in the month, but here we've got a situation where it looks as though the 21 pence area is the floor, and initially up to 26 or 27 resistance on the way down. Best case scenario by the end of next month, back up to the 34 pence level. And the other reason for being enthusiastic here in a rather dull market is that there's been bullish divergence, so quite a sharp rising trend line there of divergence. So that should hopefully push the shares higher, and that's probably the reason why it was probably based on the RSI divergence, based on the strong candle action that we've seen. Finishing off with United Oil and Gas, which keeps on plugging away with its activities in Egypt and elsewhere. Here we've had sideways shuffle along the 50-day moving average. That's now starting to rise, and we like that when it starts to rise near the lows. It implies that we're going to rally from the lows. Unfilled gap to the upside yesterday. We've held that gap, so looking really now for the 200-day moving average at 1.6, and maybe by the end of next month up to 2 pence at the top of that falling November, that gap down from November, but at least 1.6 in the 200-day line look to be on the cards there for UOG. That's it from me today. More updates tomorrow.